From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 28, 2017. Today we're going to be taking a look at the USDCHF, the US dollar versus the Swiss franc, for today's trade analysis. Couple of trends we want to speak about. First off is the blue trend line, obviously a longer term downtrend coming all the way back from December of 2016. We've been in an overall downtrend. A little bit shorter trend line, the black trend line, capping out about the middle of the blue trend line. We see the resistance high and the market falling along that trend line over the past several months. The black box here on the chart at the bottom of the black trend line represents somewhat of a period of ranging here for the dollar franc, where we've seen resistance right around the mid 9,700 support all the way down into the mid 94s. Let's focus in on the important area. That's the green shaded area, top of the black box, and the 97.50 or so level. Let's focus in on that, zoom it in, and you can see I've circled it. The blue circles on the left hand side, resistance, resistance, resistance. So 3 times coming up into this green zone, finding resistance and repelling it and reversing the market back down to the bottom of the range. What's important is that over the past week we're in that same area. The question, of course, of the week will be, are we going to see it do the same thing, find resistance, turn around and go back down, or are we finally going to see this break out and continue back up towards the blue trend line? We don't know that. Well, it will take some probably significant factors for it to break the 97.50-65 level, but we're definitely watching for that opportunity. Over the past couple of days, or a couple of weeks, I should say, the red trend line shows us that the market's been pretty bullish here for the dollar franc. We see the market rising from the mid 94s, went into a little bit of a period of congestion inside this smaller black box right here between the pink and the blue zone, broke out through there. Let's even put another box here if I can. Didn't mean to grab that. Let's put another box between the blue and the yellow shaded area, because that's the area that the market's been bouncing around over the past few days. We'll make it a thicker blue box here. And you can see that blue box. So it's been bouncing around between the blue and the yellow zone. Challenging, testing above the yellow zone, 97.20 is the top of the yellow zone, 9,700 is the bottom. So it's been challenging it and testing it, seeing if it can break out above it. 1, 2, 3, 4 wick highs above that, challenging the green zone, 97.50, 97.65. So the red trend line is bullish. We've seen this pattern of congestion, breakout, congestion, attempting to break out now. If it stays above the yellow zone, the next expectation is that it would potentially break out above the green zone, which would be that significant resistance high that we've been talking about. Let's make that a black arrow because it's easier to see. So we'd look for the breakout above the green zone, significant new high that we haven't seen really for quite a long time. So if we're going to have that advantage, we look for a buy on a dip into support, the yellow zone, getting farther away, looking for a running head start towards the green shaded area, 97.50, 97.65. The buyers to gain momentum to drive through that green shaded area. All in all, the risk there is that it pushes back under the yellow zone and goes back down towards the blue zone. That's the risk in the scenario, is that it turns back around and heads back down to the last support. So above the yellow zone is what we're looking for, above the red trend line. By the way, also above the 100 period simple moving average, that if I zoom out again, you can see that that's the first time in quite a long time that we've been above the 100 period moving average. Take it down to the 4-hour time frame, and now you can see what's been happening. There's the red trend line. There's some Fibonacci along that red trend line, low to high. The fib for that, 236, is down here, 96.87, mid part of between the yellow and the blue zone. But a little bit of a rising pattern here. Again, if you're looking for a long shot here for the dollar franc, of course, that would be positive for the US dollar, maybe not negative for the dollar or the Swiss franc, but definitely positive for the US dollar if this takes a push through the green shaded area and continues to head higher. If we're going to look to trade that direction, again, we want to get as close as possible, 97.20, 9700, to minimize our risk, maximize our potential gain, and again, looking for the breakout above the green zone. If you're a seller and thinking, you know, maybe this little rise is coming to an end, that's a possibility. But again, I think what we're looking for would be the breakdown of 9700, the yellow shaded area, and the red trend line. We wanted to get back underneath the red trend line if it was going to go lower again. So if you're a seller, you're looking at potential opportunities for shorts into the green shaded area, looking for the break of the yellow zone, red trend line, back down to the blue zone or lower. Now, if you're trading the direction the market's going in or has been going in, you're more likely looking for buys on dips into the support, the yellow zone, buys on dips into the trend line, the red trend line, and looking for the market to eventually break through 97.50.65 for the dollar franc today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.